Morning, everyone. It's good to be here. I was here last year. So I'm just going to talk a little about my favourite topic, which is real estate investment. One of the most fundamental things that humans do. We need shelter as well as food, and I'm a very simple soul, so I got into real estate at a very young age and kind of just drifted in there and thought this will do me for the duration. So it's been a fun journey. And we've been lucky to live in this country, I have to say, because we've had positive immigration, which I'm all in favour of. We've had positive economic performance for most of my working life. A couple of hiccups back in the 70s, early 80s, 1990, GFCs and a few things. And we've been incredibly fortunate to ride through those off the back of once sheep and then iron ore and coal. And other commodities. I actually think we've been incredibly lazy with those things, and that does frustrate and annoy me, and I'm sure it probably annoys many of you in this room, but that's the way it is. So we've managed to duck and weave around a lot of things. We now have another duck and weave. It's called Trump. And God knows what that means, so I won't even go there because I've got no idea, and not many people I know do. Everyone's got a view, but I'm an optimist and I think that'll all settle down at some point and we'll get back to some sort of normality. The one interesting thing about what is going on in the world, not just in the US, but that's an interesting place at the moment with a lot of head scratching and wringing of hands about what to do and where to go, and the obvious conflicts we have around the world. But on the institutional front, Australia is still a very favoured place in terms of investment, particularly in real estate, but other areas, obviously commodities. So in the next few minutes, I'm just going to talk a little bit about the sectors. If you have a question, please just put up your hand and I'm happy to duck and weave around that, and we'll just see where we go for the next 10 or 20 minutes or so. I'll just run through the commercial markets, starting with office. Office is pretty fundamental. We went through work from home. We're still going through work from home with the crisis of a few years ago. And that's quite interesting because there was that big push to say everyone's going to be working from home, and in actual fact, globally, the office market's pretty much collapsed. The US was the most affected, followed by particularly UK. Not so in Asia. Asia was they didn't get around to working from home. The way they live, particularly in smaller apartments, and the way they operate, they were going to work every day, and the boss says go to work, they go to work. Here the boss says go to work, and they say, why should I? Particularly if you work for the government. But that is changing, and we do have just that natural thing of, do you want to sit in a room at home when you could be with colleagues and other interesting people and interact? Now, some people that love computers, and we're talking about AI, Steve was a minute ago, and I didn't hear all that, Steve, but it's a fascinating thing. And some people do like to just sit at home with a screen, but I think most of us actually like to interact. And how do you learn, the way I think, if you don't learn from others about how to get things done and how to do things, and observations help us get there. And we're finding at Charter Hall, for instance, and we've got a $23 billion office portfolio around Australia, so we're very focused on this. But we're finding now that apart from parts of Melbourne, most offices are now full. And indeed, most offices have a shortage of space because they, even before COVID, they worked on only 80% of people being in the office at any one time. And that is now peaking, and particularly Wednesdays, Mondays and Fridays, you can fire a bullet anywhere down any street in Sydney and you won't hit anyone because they're all working from home, ho-ho. But the other days are pretty full, and now they're finding that they have some issues there. So the office markets actually in Australia have been pretty resilient. And indeed Sydney, which is leading the market, is particularly resilient. And if we look down the track a couple of years, we're actually going to be out of space. That's premium space. And a lot of the major tenants are now trying to secure their new leases or rolling their leases now for 2027 and 28. because they're very concerned that they'll be priced out of the market or indeed won't be able to get what they want. The other problem we've got in office is the cost to construct has gone up dramatically since 2020 or 21. Now probably something like 30% at least higher than what it was. And compounding that has been the lack of productivity, or the lesser productivity than we had before, because of the runaway unions, particularly the CFMEU that sort of doesn't, but does exist, the ETU and others, that are causing all sorts of trouble. In Queensland, in Brisbane, where we just completing 360 Queen Street, a pretty large tower, we got down to 2 days effective working per week from union action on those sites. And that was just unacceptable. We're now back at about 4 days, which is still only kind of 80% of where we should be. So that's one of the big negatives about it. But the big positive is, with very little new space coming onto the market, particularly here in Sydney, also being mirrored a little bit in Brisbane, Melbourne, absolutely, and the lesser areas such as Adelaide's even having a bit of a run at this place. So the replacement costs are going through the roof. That means it's going to be very difficult for new product to be developed until we get more rent growth. And the forecast for rent growth is quite remarkably high. Here it's going to peak over $2,000 per square metre per annum for prime office space. And there's only about 3 of them. One of them's Charter Halls at Chifley, and then Mirvac's got one just down in Pitt Street, and there's one other. So I'm quite comfortable with that. We've been through a big markdown, about 30% write-off in value over the last 5 years. We've reached the bottom of the easing of capitalisation rates, and we're seeing a slight uptick, which will see slight growth coming into the next 12 months. And I think once we get through this financial year, 26, you'll start to see some more positive reaction from that. Industrial and logistics has been the flavour of the month for some time now, for good reason. We had the intersection of retailing and e-tailing, and we're actually seeing now, with supply chain issues, a need for more and more sophisticated logistics space, we call it. That's into very large sheds. And the automation of those sheds now is something to really have a good look at. It's quite remarkable that you can run a whole distribution centre with very, very few human interactions. Yields got down to around 3.25%, and now back stabilised around 5%, which makes sense. And that was cushioned a lot, that easing of cap rates, because we saw for the first time in literally decades very strong rental performance that came into the market in this last period. That's kind of finished. And we're seeing a stabilisation of that market, vacancy around about 3%, which is very low, minimal incentives, which is also a good thing. And that centre is pretty good. An adjunct to that are data centres, which many of you would be focused on or aware of, or maybe even invested in. There's been a couple of floats, not very successful ones just recently. And data centres, the interesting thing with data centres, which I'm interested in, is whether Australia will, how we will go with building these data centres and how much will we build. The biggest issue with data centres is power. The amount of power required to run a data centre is just amazing. There's one just out near the airport called Equinox, which is owned by a large American REIT, Real Estate Investment Trust, which I've had the privilege of going through. And that data centre, I couldn't tell you how many megabytes or whatever that is. Don't even know what that means. But all those things, it's a very large centre with another pod to go. And the interesting thing is that data centre, it's just one large one, servicing the needs of many major companies in Australia, uses the same power as 122,000 households in this city. So you just extrapolate that out, and the biggest issue with data centres in Australia is where's the power coming from and at what cost? Because that's a huge issue. If you look at the US at the moment, there are data operators, and indeed the Amazon's buying power plants, actually reorganising, I think it's 7 Mile Island. Someone's bought that, recommissioning it. If you go to Europe, they're recommissioning nuclear. Funny about that, we don't do nuclear, but we have 30% of the world's supply of uranium. Can't work that one out myself. And they're starting up their coal-fired plants. This is in Europe and Germany in particular. Primarily because the need for power now is just going through the roof. And, Mr. Bowen can talk all he likes about net zero, and I won't go into that political discussion, but it's something that is, I think, a bridge too far, personally. Retail, once again, retail was very out of favour for probably a decade. And the large centres, the large Westfield and vicinity centres, really struggled over this period where discretionary spending, and particularly intersection, as I mentioned earlier, between e-tailing, Amazon and the likes, where you just get it delivered to home, was impacting directly to the discretionary centres. Non-discretionary, which I've always favoured, and fortunately Charter Hall favours as well, has actually been performing very well, and I think will continue to do so. It didn't get the same yield compressions that affected office and pushed their prices way above market. It didn't get the same expansion of cap rates because it was still yielding 6.5%, and still yields 6.5%. And is showing pretty good growth. We get about 3 to 4% per annum rental growth, which sort of equals or betters inflation by a touch. And to that extent, that's a pretty good result. So I'm still very bullish about discretionary retail as well. Hotels had a big year last year, but very little sales evidence as to what people want there. But once again, it's part of the accommodation, the residential accommodation equation, and as such I'm pretty comfortable that once again replacement costs are probably 20-25% higher than what you can buy them for today. And I think as both international and domestic tourism kicks on, as commerce moves along, it's quite a safe place to be for the right product. A residential is one that we all get involved in, one way or another, through ownership, rental, investment, or everything else. It's a massive market, and it's a massively discussed market because it affects most people at some stage of their life, whether, as I said, it's rental, which is very difficult at the moment with very low vacancy and very high rents or rental increases. It gets a lot of airplay, and it differs from state to state quite dramatically. Here in this state, and indeed this city, we have a pretty unsustainable situation in terms of development. And we have that because we've got amazingly complex planning rules. We've got amazingly incompetent and disinterested local authorities, local governments, and we have a state governments that variably, depending on whether it's a blue or red lot, they talk a lot but deliver not much. And that means that the time it takes to bring something to market adds an enormous cost to a product. I'm involved with one. It's not, thank God it's not something it was a friend of mine that put this syndicate together. It's down in the Nanawa region. It was due to go through and be approved 6 months after we acquired what was an old golf course. And the council changed and decided they didn't want any development, despite the fact there was no housing available in Nowra. It took us 18 years, and I lost one friend along the way, who I did say, yep, I'll make sure it gets finished. It took us 18 years to get through council. Now you might think, well, that's not possible. I can assure you it is. And we wanted to do 400 lots, small lots, 270, 300 square metre lots for affordable housing, because that's what Nowra desperately needs. And that got knocked back. So we're developing 104 half acre, in the old language, 2,000 square metre lots for people that can afford half-acre blocks, so they can have their shed down the back and they're right on mower, and they're going to pay $800,000 to $1 million per block. And we haven't brought it to market yet, but we all got very strong interest. Now that is just ridiculous, but and we'll actually get a return on that, which I wrote off a long time ago. And that is just a good example, an out there example, if you like, of what is happening in this state. It's not unusual to go through a process which is 2 or 3 years at least to get a development application approved, and then to get your construction certificate approved, it can take you 6 months to 12 months, depending where you are. I know of planners. My son has a mate that's a planner in the Northern Beaches area, and that person works about 2 days a week. That person, when they joined about 6 or 7 years ago, was working at 3:30 in the afternoon and was asked by his superior, why are you still working? We said, well, I don't knock off until 5 o'clock and I want to get this thing through so it can be approved. He said, no, you don't work after 3 o'clock. That person now just says, well, I like surfing and I like doing other things. And I just use that as an illustration of what happens. You cannot get through, you can't go and talk to people anymore. No, you have to get on a Zoom call. They don't want to face you, etc. Now, this state is the worst in Australia, bar none. And I'm incredibly critical of what we've not done in many, many decades. And I've been involved in 4 decades of doing this stuff here. It wasn't bad 4 decades ago. It has deteriorated. Chris Minns, I've got to say, in his government is actually having a crack at getting something done. So I'm not going to criticise he or his government, because they are showing an interest and indeed a deliberate trying to get things on the straight and narrow. If you go to Queensland, of course, you can get your approvals in a couple of months, and you can get on with it. And you have predetermined planning guidelines, which allows you to do, and the only time you need to go near anyone is to lodge, once you've lodged your DA. If it complies with what's there, it is approved. Here in New South Wales, you've still got to through a whole process, even if it complies, which is absolute nonsense. Okay, you reckon? Yeah, 5 years. Well, I've had some successes there. Which part of Queensland? Oh. Everywhere. Ipswich. Yeah, okay. 10K, 15K down. Yeah. Code accessible. Okay. 50, 60 houses. Yeah. All code accessible. Still 5 years. Oh wow. I've got. Yeah. I'll change my speech. I've done some stuff there, smaller stuff, and we've been lucky to get things through quite quickly. But I hear you. It's incredible. Yeah. Yeah. You should go and talk to Bob L. Do you know? You've heard of Bob L? Well, I think Bob. What's that one he's got down just north of Byron there? Something Forest, King's Forest or something. I think he did pay a big fine, didn't he not? He just got the bulldozers in and took out, how many thousand hectares, I forget now. But he said, I didn't realise that. Here, I want you to approve this. And he has a habit of doing that. He said he's an acquired taste, Bob, but, that's what some people can do. Anyway, and the other side of residential, of course, is there's a lot of conversation about build to rent. There's actually something in the papers today with the Liberals, a guy called Bragg, Senator Bragg, I think he's the spokesman for housing, opposing any tax breaks for foreigners to come in and build apartments. Now, the build-to-rent market is not just... The build-to-rent market, as we describe it here, is more akin to the US style of this type of development. And in the US, it developed because they need a place to put the workers. And in the US, people are highly mobile. So if someone had opened a new factory, they'd need 10,000 workers. The municipality and others would get behind and give them tax breaks to build that so that they could house the workers. That hasn't happened in Australia. It's just around the corner, I think, a little bit. But the build-to-rent market here is not affordable assets. It's actually for a premium, and the yields on build to rent is still incredibly low because of the inputs. That's the cost of the land, the cost of construction, etc. And I'm actually not in agreement with Bragg because I don't think he has a clue about what he's talking about. But we do need more housing. It's a given, and we need ways to get that unlocked. Part of it is what I've just talked about, is planning processes, and in some cases part of it is through support, be it through federal, state or local authority support, and that's a long time coming. The problem with BTR here is, well, it's been hyped up a little bit, is it's not for everyone. It is mainly for institutions. There's quite a few Japanese institutions and US groups in this market here, and it will become a small part of the overall rental market. There's a lot more to go. The debt markets, as said, my own business is involved in property debt at the small end of the market, which Chris Broad yesterday, I think, was speaking to you about what we're doing, so I'm not going to go over that. But obviously private credit, and that gets a lot of headlines as well about what's going on at the market at the moment. And there are issues there, as there are with banking as well, always has been. Not every loan is going to be repaid on time. Not everyone's going to get 100 cents in the dollar, but a lot will. So if you're contemplating investing in that, just be very cautious and check who you're with, and spend some time on your due diligence. There's a lot of good operators out there, a few that I would challenge. The only other thing I'd say there, that some raise debt and equity for the same project with different unit holders or investors, and I don't think that's a good idea, because you've got a naturally built-in conflict. Against all that, and as was spoken about before, and as I said, I wasn't here to hear Steve, but AI, of course, is one of the great disruptors. It's one of the probably great opportunities, as I see it, because I probably tend to be an optimist and look for the opportunity, not the threat. But clearly it's going to change the labour force and the makeup of the labour force dramatically over the next period, whatever that is. I think it's just started. We're just starting to get into it. You know, people are starting to use ChatGPT and other forms of using this stuff, and there's many other things that are going on. And I'm not qualified to address that. All I do know is it's going to disrupt a lot of companies and a lot of workforces, and change the way a lot of things are done. You know, data centres. What do we call it? I was going to say data centres. I'm trying to think of people on the phones. Call centres, where we had lots of office space, mainly secondary office space, with lots of people on phones. That's been replaced with a lot of people working from home on phones. And then it was offshored up into Asia and various places, India and the Philippines in particular. And that's being replaced, I think, with a lot of AI. And once again, I'm not qualified, but all I'm seeing is this issue that's going to change the way and the types of people that we engage with, and the need for human intervention or human input into a lot of the things that we do will be replaced by machines. I have no idea where that ends. As I said, optimistically, I think that will create more new jobs than we lose doing other things that would otherwise be mundane, or if you like, factory type things. That if you look at large warehouses where you might have had a workforce of 100 people, you're probably down to 4 or 5 now, and that's happened over the last 10, 20 years. And this is just one part of that journey. So that's my quick summation. I'd be very happy to take a few questions if you have them. Otherwise, no questions. Wrap up. Okay. Thank you very much. Am I allowed questions or not? I'm not. Sorry, I'm out there. Thank you.